Good morning. This is Larry McMillan with a stock market update on Monday, October 2nd. So the market broke down a couple of weeks ago. It really hasn't recovered, and we're holding a core bearish position in SPY puts as long as SPX continues to close below 4,400. There are some oversold conditions in the market right now, and that may cause a short-term rally. But it looks to me like we're heading for another October sell-off. We'll probably bottom in October somewhere, but those can get pretty nasty. So, we're holding this core position. We will trade other things around it. The S&P chart itself has some support at 4,200, and then below that it gets a little dicey until you get quite a bit lower. The resistance, as I said, is at 4,400 right now. The 20-day moving average is falling. It's just above there. So if we were to get a oversold rally, those usually fade out just about at the 20-day moving average. Above there are resistance points from earlier this fall, but they don't really matter right now since we're in a new downtrend. The equity-only put-call ratios remain on sell signals. They continue to rise, and we are seeing that in the total put-call ratio as well. But none of these will give buy signals until they roll over and begin to trend downward. The chart of SPX itself has gotten oversold enough that what we call a modified Bollinger Band buy signal could occur. We don't trade those. We wait for a more confirmation, what we call the McMillan volatility band buy signal. But that's off in the future, not necessarily guaranteed to occur. The breadth of the market has been poor, and the breadth oscillators remain on sell signals. If we were to get a couple of days of positive breadth, we could generate some buy signals there. That really hasn't happened recently. We did have about a week ago a couple of positive days, but the oscillators were so oversold at that point that they couldn't reach buy signal status. New highs versus new lows. New highs on the New York Stock Exchange continue to be very few, and new lows continue to be fairly large in number. Had more than 200 new lows on several days and 300 on one day. So that indicator remains negative as well. The VIX index has been trying to rise along with this falling market. And so it's in what we call a spiking mode. So the stock market can fall pretty sharply while VIX is in spiking mode, and it did a couple of times in the last 2 weeks. But eventually a VIX spike peak buy signal will occur. Today that would happen if VIX closes below 16.71. But that is probably going to happen here in a relatively short order. The VIX spike peak buy signals have a great track record, but not necessarily when VIX is only at 16 or so when the signal is issued. The construct of volatility derivatives, meaning the term structure of the futures, is generally sloping upwards, and that's bullish for stocks. So that's really about our only really bullish indicator right now. However, the VIX 9-day index is a little bit concerned, a little bit elevated because of the unemployment report coming up this Friday. So overall, as I said, we're maintaining a core bearish position, but we will trade other confirmed buy signals around that. I invite you to visit our website, take a look at our daily newsletters if you want to trade these buy signals, as soon as they occur. Meanwhile, have a great week trading.